Somebody asked the question. I want to start with that question. So please start asking your question, okay? Peter asked the question, which is, please, sir, explain the smart money concept. What is smart money concept? Word like order block, IPA, POI, imbalance, repricing, premium discount arrays, institutional order flow, liquidity side pool, buy and sell side liquidity. Um, my latest proverb, okay, take liquidity, don't give liquidity, okay. Let's start with smart money concepts, okay. Now there are a lot of concepts in the financial markets, basically, and smart money concept is literally like an holy grail, okay. It gives you more precision, helps you approach price better, that kind of thing. That's what smart money concepts give you. It's just a trading methodology, okay, trading method. That's what smart money concept is about. Now, I don't know, okay, this is just based on my own thesis, which is the fact that when I started handling the Telegram group, okay, when I started handling the Telegram group, I literally don't think anybody had an idea of what smart money is, or I've not seen a smart money chat on the group all this while until I introduced it to the group. So basically, I can say I introduced smart money to everybody that was in the group. I gave them an insight into it, and everybody took it up themselves to learn about smart money. So there are a lot of smart money concepts out there. Some are very, very difficult, some are complicated. You just need to look for the one that suits you, okay? You need to look for smart money concepts that suits you. Please, let's all respond to the poll I sent out, okay? You need to look for the smart money concept that suits you. So basically, ICT is smart money concept. It's a method used to trade. Now, what's like order block? Order block is just basically, in a layman term, okay, I'll be using layman term to explain all of these things. It's just support and resistance, or supply and demand redefined, okay? Support or resistance or supply and demand, but it is redefined in another method or in another way to give more precision. So the basic way you draw support and resistance is not the way an order block is, but it has the same characteristics. What will happen at an order block is the same thing that will happen at support or resistance here. It's either it breaks or rejects. That's just it. IPA is not IPA, it's IPDA. It's called interbank price delivery algorithm. It's the method of, or it's a method of, or pattern in which price trades, okay? How price moves. It's the method or pattern in which price trades. There are I'm trying to remember, 4 or 5 components to a trade element, okay? 4 or 5 elements to a trade. We have accumulation, distribution, retracement, and trying to remember, okay, a minute. We have accumulation, okay, consolidation, expansion, and retracement, okay. Accumulation, consolidation, expansion, and retracement. Accumulation, consolidation, expansion, and retracement. Those are the elements to a trade setup that we have. So IPA is just those elements, okay. IPA is just those elements. IPA is basically those elements that we have that consists, or that gives us the whole idea of a trade setup. So it's either price is accumulating, basically consolidating also, okay. So accumulation and consolidation are literally the same thing. So it's basically price is accumulating, or it is delivering, okay. So expansion, retracement, reversal, and consolidation, which is basically accumulation, reversal, consolidation, accumulation, reversal, expansion, and retracement, okay. Is it that price is accumulating for an expansion, or expanding for a retracement, or retracing for another expansion, or expanding for a reversal? So that's the concept behind IPA. POI is just an area, a point of interest. That's what it means, point of interest. This is a certain price you want to see reaction. I will explain other block on the chart, okay. I will explain other block on the chart. So POI is just a price area you want to buy, or you want to sell a financial instrument. Just that price area you are watching that you want to buy or sell that financial instrument. Imbalance is basically inefficiencies in price. Price trades two ways: efficiently or inefficiently. So imbalance is basically inefficiency, or FVG. It can be called inefficiency or FVG. It can be called any of those things at all: inefficiency or FVG, or imbalance. Yes. Repricing is just price retrading, or giving you another entry model. Premium discount arrays. Wow, you asked a lot of questions. I'm trying to understand. I'm trying to give a proper um definition and explanation to it. Premium and discount array means expensive and cheap areas to buy. Okay, expensive and cheap areas to buy. It's just expansion and retracement or impulse and correction. Institutional order flow means where is price going to or direction of price. It's just basically trends, but in a more in a more complex manner. Okay, trend direction, but in a more complex manner. Liquidity side pool. Okay, liquidity pools, not liquidity side pool. Okay, liquidity pools is just an area in price or an area on the chart where money is sitting at. Okay, where money is sitting at. Buy side or sell side liquidity, it means where money is sitting at when you're buying, where money is sitting at when you're selling. So take liquidity, don't give liquidity. All I mean is be conservative with your trade. Don't lose your capital, rather make more to your capital. That's what it means. Okay, don't lose your capital. That's giving liquidity. Take liquidity. That means make money from the market. So that is basically what it means. And before I go to the chart to explain some of these things Peter asked for, I have a few nuggets here. Trading nuggets for you. Okay. So let's talk on the first slide. Okay. A profitable trader will practice his uncomplicated system so as to build confidence before trading with real money. Now, this basically means that your trading approach must not be complicated. I've seen a lot of SMC charts. I've seen a lot of technical analysis charts. I've seen a lot of indicator-based charts. And one thing I notice is the complication. It's supposed to be simple. It's supposed to be easy. Okay, so this is where the concept of uncomplicated system, your system must not be complicated, it must be simple and straightforward. Okay, because if it is simple and straightforward, you'll be able to see the things you are looking for on the chart easily. You build confidence before you place a trade with real money, and that's why I advise you have to build your confidence with real money. Don't demo trade at all, it won't help you. I know my reasons of saying that. I've said it multiple times. It will make you lose your self-esteem. Imagine you are trading a demo account of $10,000 and you're going to start trading with 50,000 naira. That's a huge difference. Because the mindset of a $10,000 is what is in your head instead of the mindset of that 50,000 naira. I hope we all understand. So as a profitable trader, you want to be a profitable trader, you will practice your trading system just to build confidence. The whole idea is not to lose your capital. Build your confidence before you now go in with bigger money. Now, another thing is, as a trader, you need to accept that losses is part of the game and know that profits are just around the corner. Don't start switching to another system. See, I have lost a lot of money also in the financial markets. You will lose money also. But the whole idea is to understand that losing money is part of the game. If you think of trading as a business, okay, as a business that you run, I have one question to ask everybody, and I want a response in the chat box. Does businesses fold up or not? Can you lose money in a business? Can a business fold up? Yes or no? I want a lot of response. Give me your response in the chat box. Now, we've gotten a lot of yeses. Okay, we've gotten a lot of yeses. Why are you now scared of losing money in the financial markets? If you think of the financial market as a business, remember the financial market has a potential of $6.6 trillion where you can take your profit from. But a business doesn't have that accurate potential it's going to give you. So why are you scared of losing money in the financial markets? The whole idea is losses are part of the game. Your profit is just around the corner. With the right system, with the right risk management and the right trading psychology, you'll be able to scoop your own bit. Remember, I told you if you can do 6% of your trading account weekly, 6% is too much. 3% of your trading account weekly, over time, it will add up. That is what nobody wants to do. You don't want, because see, listen to it, 3%, 6%. You think it's very, very small, but truth be told, it adds up. It adds up. It adds up. It adds up to a whole lot. A whole lot that could make you made for life. And that is just it. Losses are part of the game. Imagine you place 10 trades. The first 3 trades in your 10 trade is basically a loss. What is the chances that you make money off the next 7 trade? The chances are high because the market has a lot of opportunity to give you. And understanding why you made those 3 losses, you won't want to make such mistakes again. Not just going to go and start using another person's strategy. No, not at all. That is not how to approach the financial market. Like I said, losses are part of the game. Profits are just around the corner. You don't need to switch your trading system. No, there's no need for you to switch your trading system. No need to switch your trading system. Losses are part of the game. Accept that fact. Once you understand losses are part of the game, you'll be able to keep a stern focus and understand that any loss you incur in the financial markets, you surely recover it. You surely recover it. So I'll be using a clean chart today to explain everything. Asked about SMC, but please, I'm still expecting more questions. Ask more question on trading psychology. Ask more question on risk management. Ask more question on trade management itself. Okay. So the next thing is, with good money management, as a profitable trader, you will keep your losses small when you are wrong, and you will leave your profits running when you are right. You will keep your losses small when you are wrong, and you keep your profits running when you are right. You keep your losses small when you are wrong, and keep your profits running when you are right. The whole idea there is to have self-control. Have self-control as a trader. I can't underemphasize. Okay, I have to overemphasize the whole idea of self-control. See, if you don't have self-control, when you trade, there will be a bit of problem. Because for you to make profits consistently in the financial markets, you need to have self-control so that when you have losses, you can quickly overcome your losses. And when you have profits, you can leave your profits to run to hit your profit target. See, I know traders, okay? Not I know traders that when they are trading the global financial markets, if they have one profit like that, all they will do is they quickly close the trade with that small profit. But when they have losses, they will say the loss will soon change to profits. Until they lose all their capital, all of it. You don't want to be that type of trader. Trust me, you don't want to be that type of trader. You want to be that type of trader that understands his or her purpose of trading the global financial market. You want to be that trader that understands the purpose of trading the global financial market, which is not to trade based on hope, but to trade strategically with a good plan that gives you an edge in making money in the financial markets. Do we all understand all that has been said? Yes or no? Do we all understand all that has been said? Yes or no? Before I now go and start explaining the concept of smart money, I'll just touch on a few things that was asked. I won't go on into everything. There is smart money concept on the group. Study it religiously. Ask questions religiously. That is how you gain an edge in the market. Okay, you learn more of the lessons from the market. So let's go to my MT4 app. Very sorry about that. Okay, I'm trying to load my chat. Okay. If you can see my chat clearly, please say a yes. If you can't see it clearly, please say a no. I'm going to explain that also, okay? If you can see my chart, great. Now, the another problem traders have is the fact that traders want to make money off of financial instruments. Now, I used to say something, less is more. Look for opportunities that will favor you in the global financial market and capitalize on those opportunities. Have just that 3 or 4 pairs that you always check every day for opportunities. Now, I know this might sound funny, but it's simply the truth. I got in on CAD JPY sell. Yeah. I got in on the sell, yeah, on a lower time frame. I know it sounds funny, but I got in on the sell, yeah, on the 1 minute time frame. Let me show you proofs. Let's look for that area where that sell happened. Let me show you how I got in on the sell. It was very, very. I wouldn't really advise a trader to do such. Yes, let me show you how I got in on the sell. This was not done overnight. It was not just because of I knew how to do it, then I did it. No, this is how I got into the sell. Now, I knew price had to react, take out an old eye on the daily time frame. Once I knew that, all I did was just I came down to the 1 minute and I wanted to get an entry on the 1 minute because I wanted to prove somebody wrong. I got a break in market structure. When this candle was bearish, I couldn't find any reason. Okay, I couldn't find any reason for price to come back into this order block. That area that is white, I couldn't find any reason because there is no inefficiency or anything in price. All I did was concentrate on this breaker block here. And it was on this bullish candle right here I got my sell entry. Let me point it out right here. This bullish candle, this small bullish candle right there. Now let's mark out where I got the entry from. So we're gonna see it on the 4 hour now. How or on the 1 hour. Do you see how precise the entry was? I basically left yesterday though. I didn't write this down. I left yesterday after this huge reaction due to card news. I got out with 130 pips exactly. 130 pips. Now the reason I did not consider the 7 pips is because of spread. Okay, spread. I didn't because it was during the news, so the spread was like it widened to like 7 pips. So I just quickly left. That's why I didn't go. But imagine 130 pips. You are able to do this, or you're able to see this type of trade twice in a month. This is more than I made more than 6% of my trading account this week just on this trade. It's not because of I understand the market, but I understand that these things happens once in a while. So I was ready to capitalize on it. Now, even if I did not go to the 1 minute time frame to get this entry, I could have gotten this entry on the 1 hour, which is simply the same concept on the 1 hour on the 1 minute. This is breaking market structure here. This is breaking market structure here. Price consolidated for a while. See where price came into. Price came into this other block, and what happened? How many pips was this? Let's say you got tagged in there and you 125 pips. It removed 7 pips spread due to the news. You'd have still made out with like 115 or so. It's very, very easy. Very, very easy. The issue is you want to look at the old 28 currency pair and make money of it. Once you understand these things, I made money from these 3 pairs over the week. I made money from it. I caught EU sell right here on the 1 hour. Yes, I remembered. I shared this trade right here. EU sell, I caught it right here. And I wrote it down. AUD sell, I caught it on this week itself. Because I knew price was going to do something shady right there. So I got it on the week. I didn't even go down to the 1 minute for this one. I just entered aggressively from the week and wrote it all the way down. So you can actually gain insights into all of these things once you understand that financial instrument you're trading. That is just the whole idea behind it. Now, I'll talk about three things. I'll talk about order blocks. I'll talk about imbalance, and I'll talk about institutional order flow. Okay. So what are order blocks? Order blocks are just like support and resistance. They are just like supply and demand, but they are a bit different. There's a bit of difference to it. Now, if price is in an uptrend, I wish I could draw on this, but there's no way for me to draw. So if price is in an uptrend, okay, we always have impulse and correction. Impulse and correction. The bearish candle before the next impulse is an order block, a bullish order block. And price always has a tendency of coming back to it. See it right here. Bullish order block. And you got your entry on this candle. Let me show you another one. Bullish order block. And you got your entry on this candle. You see how the entries get precise. Let's go and look for more again. I just want to make sure you get enough clarity on this. So like I said, bullish order blocks are that bearish candle before the next impulse in a bull trend or in an uptrend. This is a order block because this is the last bearish candle before this impulse moves to the upside. And see right here. See how many times price came there? 1, 2, 3 before skyrocketing away. This is a bullish order block. This is a bullish order block. Still the same order block reacted here. Let's go and look for more. So the thing is, or the whole idea is, it's not just about me telling you that this is a bullish order block. You have to go and hunt for it on the charts yourself. That is how you understand it better. This is a bullish order block here. Now, when we say bearish order blocks, we are talking about the opposite of bullish order block. This is going to be the last bullish candle before an impulsive move to the downside in a bear trend, like this. So this is a bearish order block. Sorry. This bullish candle is a bearish order block. See how price came to it. Price did not get to it here, but price initially came to it, and we see how many people dumped. Now, this is a bearish order block. There's something called liquidity order blocks. Okay, it's another concept, but this is a bearish order block, and you see price traded off it also. This is a bullish order block here. Price did not get to it, but even price came a bit closer to it and reacted away. Let's go and look for bearish order blocks. Let's continue looking for bearish order blocks. This is a bearish order block here. This is a bearish order block here. This is a bearish order block here. This is a bearish order block here, but price never came to it. This is a bearish order block here. Sometimes price will never come back to an order block. So even an holy grail has its own shaky parts. Like it's an holy grail doesn't mean it to be 100% accurate. Okay, so that's just order blocks. We've talked about order blocks. These are order blocks are. Okay, so let's talk about institutional order flow. Institutional order flow just means the direction price is moving in. Okay, so let's zoom this out a bit. Let's go to the daily time frame. Okay, I like to use the daily time frame for institutional order flows. What is the direction of CAD JPY? Is it up or down? I'm talking about everything in this blue box. Before you make your response. I'm talking about everything in this blue box. Okay, everything in this blue box. What is the direction of CAD JPY in this blue box? Is it up or down? Let's start from there. The direction of CAD JPY in this blue box, is it up or down? I like to get a lot of response. I'd like to get a lot of response. Up, okay? Then what you say when it comes to smart money concept is the institutional order flow on CAD JPY is bullish or bullish IOF. IOF means institutional order flow. In this blue box, now this part, what is the institutional order flow on CAD JPY? Yeah. Can anybody tell me in this blue box? What is the institutional order flow in this CAD JPY? Yeah. A lot of response. Because someone said the answer doesn't mean you can't see the answer. Say your answer also. Okay. Now, this is the idea, or this is my own approach. My own approach towards institutional order flow. Once I understand the institutional order flow of a financial instrument, I look for trades, only trades in that direction. I look for trades only in that direction, only in that direction, only in that direction. I will only be looking for sell trades here, and I'll use CAD JPY as an example. Okay, I will use CAD JPY. We'll look for a sell opportunity on CAD JPY. Don't worry about it. I'll show you how to do it. How we use smart money concepts to look for sell opportunity on CAD JPY, and I'll show you how. And you'll see it will come with accuracy. Okay. Now that is just the concept of institutional order flow. Once you know the direction, look for trades in that direction. The trend is your friend. Okay, the trend is your friend. Now, I sent out polls. Please let's respond to the polls. Okay, I'm very big on responding to polls. Please respond to the polls. So let's go to the last one. I said I'll talk about order blocks, institutional order flow, and imbalance. So what is imbalance? Imbalance can be called the law of name. Some people call it fair value gap. Some people call it inefficient price action. Some people call it imbalance. I call it imbalance more. Okay, I call it imbalance more. Okay, because it's just imbalance is just because of price is not balanced. Okay, that's why I call it imbalance. Now, I'll show you why it is called an imbalance. Look at this area in price. Look at this area I boxed blue in price. I want you to pay close attention to that area. Pay close attention to that area. Now look at this area I boxed blue. Yeah. Okay, look at this one that is in blue here. It's a simple yes or no question. Okay. Do they have the same characteristics? Yes or no? Is the characteristics the same? Yes or no? Let's see those that are looking at price properly. Do they have the same characteristics? Yes or no? Yes or no? Do they have the same characteristics? Yes or no? I'd like to get a lot of response. I'd like to get a lot of so those that are following. Okay, someone said yes. Most people are saying no. Okay. Okay. Is that all? Is that all? Okay. Alimat, are you in an area where there is no noise? Can I invite you online to tell me why you said yes? And also, I'll pick somebody from the guys that said no. If you want me to pick you, just say yes. Just say yes. If you want me to pick you, just say I, and I'll pick you to tell me why you said no. Okay. So, Halimat, please respond to that real quick. Respond to that. Okay, AGK, I'll pick AGK. Halimat, please respond to that real quick. Okay, great. I'll send you an invite right now. Join me ASAP. Join me ASAP so you can tell me why you said yes. Okay. I sent you an invite. Please join me. I'm looking for AGKs. Okay. AGK, I'm sending you an invite also. Please join me. So Halimat will go first. Okay, ladies first. Okay, waiting for Halimat and AGK to join me. Please make sure you're in an environment that there is no noise, okay? No noise at all. Waiting for Alimat and HK to join me. Okay. Just from looking at, I'd like to get more response. So if you've not given your response, Please give your response. Nobody is wrong or right on my webinars, okay? We are all giving our idea. I always say it every time. It's your own idea of it. Then when I now say something, it is based on popular opinion. Popular opinion based on my research about the topic, what people are saying about it. That is when I now let you know if you are right or wrong. But basically, first off, you are not wrong, you are not right. It's just your own idea. Just your own idea. Okay. It's still showing Alimat and AGK are getting ready. Okay, we haven't got much time on our side. Okay, if you're finding it difficult joining me, then just drop your reason in the chat box while I go on with the webinar. Okay, just drop your reason in the chat box. Okay, so now drop your reasons in the chat box. There's no need. I'll just cancel the invite. So we don't waste much time. Okay, but after the webinar, I can take 3 questions and I'll invite you online to speak with me. Okay, now looking at this first piece of price action, you see we had consecutive green candles, and if you look at these green candles consecutively, looking at these green candles consecutively, there is space in the middle. Okay, there is space in the middle. We can all agree that there is space in the middle. I don't want to start marking out all the green candles, but looking at the green candles consecutively, you see that there is space in the middle, right? Now, look at these candles right here. When there was a space in the middle, immediately price covered it. Just from what I put out right now, just from what I said, you understand what an imbalance is. Exactly, there is imbalance in one. Why there is balance in one? One is inefficient, one is balanced. One is fair, why one is not fair. This is imbalance, this is inefficient, this is not fair. Okay, while this is imbalance but it has been balanced, this is inefficient but it is efficient because price has covered the middle. This is fair because price has traded through the middle, covered that gap in price. Okay, so every single time price always has to be balanced. Price always has to be balanced. Okay, now that is the idea of imbalance, fair value gap, and inefficient price action. Okay, all you need to understand is when you are looking for your trade, make sure that if you are trading in a certain direction, there's imbalance there, which means price has a high tendency of going to that area like this. When price got here, let me tell you something. When price got here, that we had breaking market structure. If I saw this, I did, but I think I shared it on Telegram group. If you go back to like last 3 months or so, I talked about CAD JPY and I gave these buyers this setup there. If you look properly through the images, I sent it there. I'm sure even DXY buy, I sent it there also. I sent all of these things there. Now, once we had this break in market structure and we retested this order block, or we returned to this order block, if I took a sell, somewhere around here, do you know that I will take my profit at this area here? That means I will catch all of this move. All of this move. I will catch every single thing. That's 352 points. I will catch everything. Why? Because I know price has a high tendency of coming back into all of this gap. Or what I will do is I will take partial profits every time price fills a gap. That is just the concept of imbalance. Now, I've explained the 3 concepts easily. That is the concept of imbalance or inefficient price action or fair value gap. That is just it. Simply what an imbalance is. It's not difficult at all. Do we all understand now? Do we all understand now? Let me use a life example to explain. Let's say, for instance, you live at Ikeja. Ikeja is the capital of Lagos State, okay? The capital area in Lagos State. Now, and you walk on the island, okay? Early in the morning, you leave home and you take a bus from Ikeja down to the island. Let's say Lekki, for instance, okay? You go to Lekki. Do you know that when you go to Lekki, you've left an imbalance on the road, okay? You've left an imbalance on the road, a gap on the road. You left your house to work. That is a gap. Now, for you to fill that gap, you must close from work and enter a bus back home. That means you've delivered an efficient price action on that road. Do you understand now? Am I making sense? Am I making sense? Do we understand now? Just using the life example of you leaving work, entering a bus to your house and entering a bus back. I'd like to get more response. I'd like to get more response to know everybody. Okay, what I said is, let's take an instance. You live at Ikeja. Ikeja is the capital of Lagos State, and you want to go to Lekki. Lekki is on the island. Okay, you will have to wake up in the morning from your house, enter a bus down to the island. So I said that gap from your house to the island is an imbalance, is a fair value gap, is an inefficient price action, or an inefficient travel action. Okay, an inefficient travel action. And for you to make that travel action efficient, for you to make that fair value gap fair, for you to make that imbalance in travel balanced, you need to close from work and enter a bus back home. So when you are coming back home, you will feel that imbalance. You will make that imbalance balanced. You will make that fair value gap fair. You will make that inefficient travel action efficient. Now, look at the instance here. This is, I'm coming, this is where you stay. This is Ikeja. This is your workplace on the island. If you go from here to here in the morning, you must go from here to here in the evening. Do you understand? So when you go up to work, you are leaving an imbalance in price. You are leaving an imbalance in travel. You are leaving a fair travel gap. Okay? You are leaving a inefficient travel action until you come back home. That is when your imbalance in the traveling is balanced, because you've gone to and fro. That is when your fair travel gap is filled. You've now made the travel gap balanced, fair, because this is now equal to this. That is where you've made your inefficient travel action efficient. Do we understand now? Do we understand now? Richard, do you understand? I'm very keen on everybody understanding. Very, very keen on everybody understanding. And please, let's respond to the polls. I tell you guys, the only way you pay me back for my time is by responding to the polls. This way, I know what to set up in the next class. This way, I get encouraged to set up the next class. So let's just respond to the polls. I just sent another one out right now. Okay, I just sent another one out right now. Let's respond to it. This is the gap right here. You see these two line, the gap from the up line to the down line. Let me mark out another one again. Let me just use the box tool. This area that is white is the gap. This area that is white is the gap. Do you get it now? That is the fair value gap on the chart, or that is the imbalance on the chart. It's on the Telegram group. Just go back to old messages, or just check on the just use the images. Okay, just use the images. Now somebody asks, using the profit cross strategy, is it advisable to enter on the 15 minutes time frame? Now let's go to the profit cross. Okay, I have a template for the profit cross already. Now I noticed something. I was backtesting the profit cross recently, and I noticed something. What I noticed is that for you to make a lot of profits from the profit cross strategy, you have to use it on a higher time frame. Okay, Peter, I noticed that you have to use it on the higher time frame, such as the 1 hour or the 4 hour. So I think I will backtest using a year or 2 year data. using profit cross. Okay, I will backtest using profit cross, a year or 2 year data on how well it works on the 1 hour and the 4 hour time frame. And I'll tell you guys if you should start using it on the 1 hour or 4 hour, or if you just continue using it on the 15 minutes time frame. Okay. Exactly, Uchena, you are correct. You are correct. Now, to make it balanced, you must sell back from Lekki to Ikeja. If, please note, if, if price action gives you a reason to sell back, the truth is, price will give you a reason to sell back sooner or later. Maybe now, maybe later, maybe next year. But if price doesn't give you a reason to sell back, don't sell back. Just continue buying if it is still buying. Okay. But most times, inefficiencies always get completed. So the tendencies of giving you reason to sell back is very, very high. Okay. The concept of imbalance is fractal. Okay. The concept of imbalance is fractal. The concept of imbalance is fractal. The concept of imbalance is very, very fractal. Like I said, the post is on the Telegram group. Go back to old pictures I sent him. It's there. Okay. Now, I will leave the analysis of CAD JPY for the end. Let's go to my slide. I have a slide for this. Okay. Let's go back to the nugget we were talking about. Now, let's go to the next slide. You see, when you're trading the global financial markets, there's one thing that is of the highest importance to you as a trader, which is capital preservation. Capital preservation is the key to survival in trading. Once you can preserve your capital, how do you preserve your capital? Risk management. Risk management and taking profit or taking partial profits. That's the best way to become profitable in trading. And that is the best way to preserve your capital and compound your capital. Do you understand? Best way to preserve your capital is take profits and compound your capital and use good risk management. Cutting your losses short is as important as letting your profits run. If you can cut a loss short, you should be able to leave a profit to run long so you can cover for your losses and make profits. See, many traders, they make the mistake to perfect their trade entries, but they don't pay attention to having an approach to exit the market and have a good money management skill. Now, this is one issue I had like 4 years ago when I started trading global financial markets. Please and please, always have a reason to exit a trade. Don't just exit a trade because of you want to exit it. Have a reason to exit a trade. Perfect your entries, yes. Also, have a reason that is perfect to exit your trade, and have a reason that is perfect not to trade. That is how you manage your money. Don't trade is trading, or not trading is trading, because you are preserving your capital. It gives you an edge. When you preserve your capital, when you don't trade because of you don't see a reason to trade, you've just passed level 1 of becoming profitable in the financial market. You've controlled yourself from trading in global financial market. You've basically controlled yourself from trading in the global financial market. And that is one key step. One key step when trading. One key step when trading. Key, very, very key. Because you're giving yourself an edge over the markets. Now, you see, when we dive more into the first market, see, the first market is too complex, okay? It's complex, it's big, very, very big. To allow the prediction of price movement with 100% certainty. You can know where price will go, but you can never be 100% certain about it because you will still have doubts, misconception. This is where you now grow confidence. You grow confidence of your trade so you don't have misconception or doubt about trading the global financial markets. The profitability for the market to continue its directional movement is higher than the sudden trend in direction. See, the profitability that CAD JPY will continue going down is greater than it just changing its direction. because the trend is my friend. I will trade the trend until it bends, until it change. The trend is always your friend. Don't forget this. The trend is always your friend. Traders can take advantage of the universal law of momentum together with proper money management to increase your odds in winning the global financial markets. Okay, you can take advantage of momentum in the financial market to win whenever you place trade. Now, just from experience, if you see the cloud is dark and you hear thunders, you know there is a tendency that rain wants to fall. Okay, the same logic applies to price pattern when you're predicting market direction. See, if you notice price is acting shady, price is misbehaving a bit, price is acting somehow that you don't know a bit, this is just telling you that there is doom that is approaching. Doom is approaching. Doom is approaching. Doom is approaching. The best thing is for you to take cover, protect yourself, looking for an umbrella. By looking for an umbrella in the financial markets, basically means that manage your risk properly, take your profits and leave. Manage your risk properly. That is what it means. Because even in real time, meteorologists rely on high tech to forecast the weather. You should do the same by going to your technical analysis and understanding it better. That is why you need to take advantage of online tools to help you better your forecast about price. Do we all understand the concept now? Take advantage of online tools to forecast price when you are analyzing. Understand that if price is acting a bit shady, something wants to happen. Something wants to happen. Take advantage of momentum to make profits in the financial markets. We've come to the end of today's Ask Me Anything session, but I'll be analyzing CAD JPY for the interest of everybody who is interested in me analyzing CAD JPY. Okay,